What's up everybody, Tom here with another video. In today's video, we'll be discussing our technical analysis levels for the SP 500, Nasdaq, Bitcoin, Apple, Tesla, and more. It's been a pretty wild couple of days of trading to start the week. We've had, of course, big sell-offs followed by pretty nice gains. Are we trapped in a zone? We'll be trying to answer that today and then figuring out where the markets are going next. We also have many people discussing 1929 again. Will a crash really be occurring, and are there some synergies there? Let's try to answer it all in today's video. Stay tuned, guys. It's going to be a good one. Okay, and this begins our market recap for the market's close 5th of October 2021. And when we're taking a look at a heat map here, you'll notice it was a sea of green, with most companies that were down in the previous Monday session and now up. Microsoft 2%, FANG stocks across the board, even Apple up 1.42%. And on the surface, you would look at this and think, oh, maybe the dips already happened. Maybe now we're looking to buy it. But wait just there. There are some key levels that we'll be talking about today that make us not be able to realize that it's all over just yet. Firstly, let's go and have a look at what actually happened during the market session. So we saw that rally in the morning. We knew that when we did our close stream, when the previous day closed around that 4,300 on the S&P 500, that it was just such an important closure. It happened right on support. It didn't get lower. So the rally was kind of almost ordained from that point onwards. Then we got that rally, we got the sideways action through most of the session, and near the close, we saw some selling, some profit taking from Wall Street after a very nice push up through the session. That's the important part. We'll be talking about that soon. When we have a look at all the sectors, you'll notice financials did the best, with the US 10-year actually spiking, surprisingly not putting pressure on the QQQ. We'll discuss where it could. And then every other one of the markets across the board was pretty much flat to up around 1 to 1.5%. Nothing too much notable there. But let's get into the technical analysis. Let's talk about the SPY. Let's talk about the S&P 500, then move into some stocks. Obviously, finish up with the QQQ and Bitcoin. And what I want to talk about is where we're at here with S&P 500. So we've seen some previous resistance and support. And let's talk about the level. So we had here some previous support around that 436, and we've currently come up and kind of tested that zone. Now, this has been a few days of trapped range, and this is why I say it's too early to say that it's completely bottomed in, because we have a low around that 430 area, we have another low, we have another low with a rally, we have a low with a sell, and then we have another rally right back to it. We've also got a 2050 cross and a bit of a downtrend that's come through here with the trend line, so that if we do close above this level, do I think that's a big deal? Yes. Do I think there's going to be some bulls trying to close the gap here? Absolutely. And if we did close and get back above here, we're starting to talk about a very serious double bottom pattern that can lead us to much higher levels. But I want to just remind everybody that while we're trapped within this zone between this 4,300 area and this 4,375 area on the S&P 500, we're really at a point where the market has no true direction. It's more of a trader's market than an investor's market necessarily. We do expect a dip. We know that markets are optimistic. We know that markets are most likely going to be higher than where they are right now come November and December, into those peak seasonal strength times, the Christmas rally, obviously also Thanksgiving, the rally around that public holidays event. That's notoriously very good for the market. So we're trapped within a range, and until we break out of this range, we don't get the next clear direction. If we break out below, what will the distance look like? Well, the good thing with technical analysis is we can take the distance. We're basically in a channel, which we just discussed, and then if it does break below, where does it take us to? Interestingly enough, the 420 or the 4,200 on the S&P 500. And when we look at the options in just a few moments, you'll see why this is such an important zone should we break to the below side. Now, if we break to the upside, where do we go? Well, guess what? It goes straight into the resistance at around 44.60. So see how these technical patterns, these technical zones become really good areas for us to take closure breakouts both ways. And when they proof, it means also the market's acting really technically. So we've got this great downward line here. We've got the potential for a really strong rally through that 43.70, 43.80 area should it happen over the next 24 to 48 hours. And if we stay within the range, well, we're just trading within that area. So lots of opportunity here for the day trader, for the scalper. And I hope you guys are starting to see how this manipulation works, how this market tends to line up. So speaking of manipulation, let's go and have a look at the options, call and put walls. And I want to just bring our attention back to yesterday's video, the video where we discussed the 420 and then that 440 zone, the call wall at 440, the put wall at 420. Now, today was a big rallying market. It moved up and it went up, over 1%. If we actually have a look at today and we think about what happened here in the session, well, guess what? The 420 strike went bonkers. Huge amounts of people were opening puts at 420. Now, I don't know who the hell was doing this. I hope it wasn't you guys. But basically, people were getting super bearish on the market and opening up buy puts. And when they do this, what do? They create a put wall. And this put wall is really going to be one of those areas that I guess we want to focus on, because do we expect come the Friday, come 8th of October to be underneath 420? No, we expect if we do close below this range, we get below 4,300, the market would gravitate towards 420, sure, but it would be unlikely to be able to breach such a key level, because it is in Wall Street's best interest and in fact option sellers' best interest to expire these as worthless as possible. So we're still trapped within these two ranges here, and it gives us a great direction, a great area to have our technical analysis zones for set take profits and set stop losses for the week ahead. And that's why we use these options. If we're talking about maximum pain theory, which we discuss a lot on this channel, here you have an example of where it would be perfect for the market to close based on the current amount of options open. And that would be a 434 for the Friday. So basically, if they closed at 434 on the SPY, that would be the absolute peak, absolute maximum amount of money that options writers would be able to make off everybody else buying the options. It doesn't always happen, but it's good to know that we're in that midpoint, and that's exactly the price that would be the perfect zone. I like to use the walls more, but I thought I'd bring it up in today's video. So now that we know that the SP 500 is trapped within a range, that we don't have a clear direction on it yet, and that we're being nimble and we're being fast in the markets, what other stocks are showing us kind of interest? And we always cover Tesla here. And if you enjoy Tesla, remember to subscribe and smash the like button as well if you enjoy it, because we cover Tesla, we cover Apple daily, and we cover, of course, a lot of other stocks of interest. And Tesla has been trapped within this little area as well. It's been unable to breach 800, which we know is a key zone. We get above 800, boy, oh boy, are we going to be keen on that bull pressure that should come through. And we basically keep rejecting here and creating like long leg doji style candles. So if we zoom this in and we think about this current market on Tesla, it's just stuck within a range. If we break the range, 800 plus closure daily, well, we get very bullish and we start to continue on with the trend. If we come back down to the 760, 762 area, we know there's buying pressure currently here from buyers, previous resistances becoming support, and our favorite little 20 moving average here on the daily, which has acted as a decent little buy zone recently in the pullback. So we've got kind of like a trapped range on Tesla, and that's really how we look at it. If it did further sell off, we've got a beautiful trend line as well that's found a lot of support buying. We've covered this several days, and bang, that's where it is. Let's have a look at the options, see what they're telling us about the current price movement for Tesla. And again, it's mostly been a huge amount of negative pressure on the puts here. And that negative pressure has culminated in a $700 put wall. And what this means, again, is that people are making negative bets against Tesla. They're negative betting it up to around that 750, 760. And it gives us confidence that if we're buying and the price action currently tells us not to be concerned and overall bullish, that if everyone else is bearish, again, shows us that there's a bit of a put wall there. The market's unlikely to want to expire come the Friday, come this week ahead underneath those zones. Conversely, it also does have an $800 call wall. It's not very big, but there is a few options here that are sitting around $800 that come expiry They will either expire in the money or not, but it is kind of stopping the market from being able to go through. Few extra opens here coming through on the Tuesday session in terms of the 800 pluses. This will be retail looking towards that optimism for the rest of the week. Overall, 800 plus closure would still be a phenomenal effort for Tesla. Let's move over to Apple. Apple's probably the most important chart to be looking at from the big tech stocks or the big stocks in the market. And when we take a look at the Apple chart here, you'll notice nothing really happened. Even though it rallied a lot through the last 24 hours and we saw that big rally above, it just came back to our trend line down. And this trend line, until it breaks above and until it really gets through that 142.50, we're not seeing Apple from the bull side. I mean, there's no way really other than to look at it this way and to say, okay, we recognize what's happening. Previous supports are becoming resistance. This is what we call role reversal, where the previous supports become resistance. We've got that downtrend. And if we expect anything at all, we actually expect a little bit of weakness to come in through here. And if it doesn't come through and it ends up pulling back here a little bit and then bulling through, gets through 142.50, well, then we've got to start being nimble and quick and going towards the bull side here on Apple very quickly. Our expectation still on the daily side is weakness, because when you look at this market and you look at what Apple did and you look at where it is, the most likely scenario here is still a little bit of further weakness back down to our overall trend line at 135. Will it happen? We don't know. Is it likely? If you were looking at this current downward trajectory, you would say, yes, this is the zone that sellers and bears will try to get control of the market and push it back down. And that's something I'd be paying a lot of attention to. But there's a chart that I think even more people should be paying attention to, and it's the US 10-year, and we'll be looking at that in just a few moments. 2050 cross to the downside, previous support becoming resistance, and two really key levels there for Apple. If we have a look at the calls expiring come the Friday session, again, huge amounts of calls above that 140 strike. All of these would be in the best interest of Wall Street. They would have happy, smiley faces if they were able to expire this effectively underneath 140 by the end of the week. So that's something we keep in mind. The maximum pain somewhere in this range here, which is, pretty normal. There's usually a lot of open interest from retail in this area. So we talked about the US 10-year, and the reason we bring this up is because the US 10-year actually spiked, but it didn't make a new high. And if it did make a new high, this has been notorious to put pressure on the Nasdaq. So effectively what happens is if we have an interest rate spike, all these growth stocks, people perceive it as being negative. I've talked about how it's more of an opportunity to buy the dip than anything else. But if we get through this 155 level over the next 24 hours, expect the US 10-year to spike and then it to potentially spike into 1.7. And if that does happen, 1.7, 1.75, we do see, or we expect to see, weakness come into the QQQ, into the Nasdaq, because we know that there's a correlation, at least initially, where we get a spike in interest rates in the 10-year, we get a down spike in what we would be expecting in the QQQ. So that'll be something we watch. US oil, another one also to watch. We talk about how strong this US oil has been recently. It broke through the 76. This level was big deal. It's gone towards 79. And we have longer term expectations now for US oil. We actually expect it to go to 86 after this breakout. And that's because that's where the big previous supports were. So there's a lot of expectation now for US oil to go up a lot. I'm not calling $100 or anything. I just think this is the most logical conclusion. So I wouldn't mind it actually to pull back to the 77 now, allow conservative entries to come back in, allow the 20 moving average to kind of move up with it, and then for it to rally and continue to rally at 86. Is this going to be something that pushes the market down a little bit? Overall, energy stocks will do well from this. They're breaking out at this stage. But on top of that, it's something that we'll be watching from just a economic standpoint, because of course, high oil price can put pressure on the markets if it's a little bit aggressive and a little bit too quick. Let's move over to the QQQ Nasdaq. Similar story to the SP 500. It rallied. Absolutely it did. We had previous support becoming resistance. And I think that's the most important area. We had previous support becoming resistance. If we go down to the 2 hour, you'll notice very easily that all of these spike highs have reacted with negative pressure. So we had selling here, selling here, selling here, selling here. So unlike the S&P, which is like a double bottom or a channel on the 1 hour, 2 hour charts, here on the QQQ, we just have a bit of a downward trend line, which it hit perfectly, and then was selling into the close by Wall Street, some taking of profits. And at the time of this recording, we're floating around like this similar price. So we're basically exactly where we did on the close. Effectively, the weakness came in, and that's because profit taking was had. People bought the dip. Profit level made a lot of sense here. Why not close your day trades there and reassess the next day? Reassess whether we close above this zone. And once we get through that 360, 362 area, we start to look to fill that gap on the left-hand side, something a lot of traders will be looking for, to fill that gap. That's when people will go, more uber bullish. At this point, we're still in this little bit of a declining market. We're still seeing some bearish action going through here. We talked about the Nasdaq massive channel. I talked about this being Christmas come early, and it still was for me. I mean, this was one of those levels that I was always planning on potentially looking from the investment side. And the reason why you say stuff like that is because it was an 8% pullback. And I've been very consistent here on the channel. The community has been behind this concept of most corrections, not crashes, corrections are between 8 and 12%. And I always talk about 8 to 10% as being the pullback direction that I look for. This just gives you a really good indication of how much to expect from these market corrections. Here we've got a market correction. This one was a little bit bigger, about 13% after. Then we have another market correction around 10%. Then we have the market correction here around 11%, and so on and so forth. If you go back to the global financial crisis, look at most of the corrections bar 2 and the pandemic itself, almost every one of them doesn't go over these levels. So it's a good thing to keep in the back of your mind. If you get anything out of today's video, remember that most corrections are around 8 to 12% in size, and then they continue up. So our trend line was hit, and this trend line gave us an opportunity to potentially buy the dip on Nasdaq if you had a longer term approach. There is always that chance that we spike underneath to that 14,000 level where we've got the daily 200, because when that happens, what's most likely going to be occurring is the SP500 will be hitting the weekly 50. And the weekly 50, we know, is a very, very good zone. So 50 EMA is a very good zone for pickups. That's where a lot of big investment managers will be looking at, because consistently throughout the years of especially a bullish, optimistic market, they tend to pick it up off that area. When we move over to Bitcoin, let's talk about crypto here just quickly. Crypto is just going phenomenal, or specifically Bitcoin. Bitcoin is pushed now towards the 52,000, which was our aim. Very good trading here, very good technical breakouts, fantastic long leg dojis that were closed above. I'll show you the 4 hour here. Here's the long leg doji, there's the breakout, there's the pull down, and obviously reversal. Strong trading here into the 52K. And if you've taken Bitcoin long in the recent days, congrats to you. I mean, there's been some great levels, closure above that resistance, closure above this resistance, which we knew was here. We've been covering it, and it still looks very strong. And I've got kind of plans for Bitcoin. I still think that there's this potential that we run through that November period into December, similar to 17, and we get that optimism and hope kind of coming into Thanksgiving. No matter how you look at it, it is a strong looking chart at this stage, and it's hitting these kind of resistances where we expect it to start to maybe, slow down a little, and the rest of the coins to get the movement in. Because what's happened here is Bitcoin's moving, Ethereum's moving, but the altcoins haven't moved yet. So as we see, we usually get rotation. Bitcoin becomes a little bit less lackluster, or it's not as happy, and then the money flows through to the alts. So that might be something that happens over the next 24, 48 hours in this very fast market. I want to leave you with two things. Firstly, there's the US jobs numbers coming out this Friday. Non-farm payrolls, an incredibly important figure, and that will make volatility in the market spike. It will also probably spike the US 10-year either way. So watch that for the DXY, the dollar index, the US 10-year, and of course the susceptibility for the QQQ. So I think that's probably going to be the linchpin for the week in terms of the bulls and the bears fighting it out. Another thing that we want to be looking at is just the overall optimism coming into such a big bullish run, such as 7 months. And I mention this every day, then we get those, generally speaking, pretty good gains throughout the year. And someone mentioned yesterday, yeah, but Tom, the worst month, because remember we've been down about 5% on the S&P, was this one here, and it only did 1.4, 3.7 in 6 months, and then 6.5 in a year. Look, 6.5 in a year to 7% is what we're going to have to expect. But I want to point out one other thing. If you notice the date over here, 1991, the US economy and specifically the stock market went on a heater from the early 90s into the late 90s. So there is a possibility that we're seeing a similar time. Remember the roaring 20s? We at the start of this video, we talked about 1929 and they're talking about that similarity. Well, I'm talking about the similarity of the FOMO effect. And if we have that 91 into 92 into 93, look how many of these big rally month points were happening through that time. So if you want to go with the Cathie Wood approach and be optimistic, there could be some big gains here in the next coming years. And remember, when everyone thinks something's a bubble and they talk about it being a bubble, unlikely to crash. If you go have a look at the Shanghai Composite, or you look at the 98 to 2000 crash in the Nasdaq, or you look at the Australian market back in 2003 to 2007, all of those have signs of being even more bubblicious than what we're currently seeing. Not from a dollar amount, but just from an epic gains amount over a very short period of time. So thanks very much, guys, for watching the video. If you enjoyed it, please subscribe and, of course, smash that like button. And let us know in the comments down below what your favorite stock right now in the buy and the dip scenario is. Tell us which one you have the highest conviction on. I'm interested to see what the community is looking